All right, hello and welcome IGNOU aspirants. You know, exam season's just around the corner, right? And there's this one topic that, well, it pops up all the time. Educational loans. I know it can feel a bit tricky, but don't you worry. In this explainer, we're going to break it all down. We'll give you those clear, punchy points you need to absolutely smash that question in your exam.
So, what's the game plan? First, we're going to start with the basics. What are these things anyway? Then, we'll look at the good stuff, the pros. After that, we'll get into the tricky bits, the cons. Then, we'll explore a much better, fairer system called the ICL. And we'll wrap it all up with a quick revision guide. Honestly, it's the perfect way to structure your answer for the exam.
Okay, first things first. Let's dive right in. Section 1. What exactly are we talking about when we say educational loans?
Now, you could totally see a question like this kicking off your exam paper, couldn't you? It's really asking for the main idea, the why behind it all. Nailing this foundation is so important, so let's look at what the perfect answer would be.
So here's the deal. An educational loan, it's basically a tool that lets you invest in your own future. And there's a key term here you absolutely have to remember for your exam: human capital. That's you. It's your skills, your knowledge, your future earning power. The bank is pretty much betting on you, hoping that once you graduate and start earning, you'll be able to pay it back.
Right, so we've got the what down. Now, let's move on to the why. This is where you talk about the advantages. Why do these loans even exist? What's the good side of the story?
Yeah, imagine your exam paper says explain the key benefits. What are the main points you need to hit to get those marks? Let's check them out.
Here they are, the three big ones. Step 1, they just open up access to education for so many people who couldn't afford it otherwise. Step 2 is the whole pay after you earn thing, which just makes sense, right? You study now and you pay it back when you actually have a job. And step 3, it really pushes students to invest in themselves because, hey, they're the ones who are going to see the rewards. It's a really clear, logical chain of thought.
But it's not all sunshine and roses, is it? The real marks in the exam, the ones that separate a good answer from a great one, come from understanding the downsides. And all these problems, they come from this one core economic idea. You've got to mention this in your answer: capital market imperfections.
Okay, so let's dig a little deeper. What are the major problems here? What makes this whole system so tricky, especially for students who might not come from a wealthy background?
And here's a little trick to remember the 4 biggest issues. Just remember the letters C, U, A, I. It kind of sounds like the Hindi word kuan, right? A well. And sometimes these loans can feel like a deep well of problems. So we've got C for collateral, U for uncertainty, A for information asymmetry, and I for inequity. Let's tackle them one by one.
All right, first up, C is for collateral. Now think about it. For a normal loan, you put up your house or some gold as a guarantee. But for an education loan, what's the guarantee? Your brain? Your degree? A bank can't exactly come and take your knowledge if you can't pay, can they? That human capital we talked about isn't something they can seize, and that right there makes banks really nervous. It's a massive hurdle for students who don't have property to offer up.
Next, we have U for uncertainty. Just put yourself in a student's shoes for a second. The future is, well, it's a giant question mark. Am I going to get a job? How much am I actually going to earn? What if the economy tanks? All this uncertainty makes taking on a huge pile of debt a really scary prospect. It's enough to make anyone think twice.
And now for A, information asymmetry. Whoa, big words, right? But it's actually a super simple idea, and it'll sound great in your answer. All it means is that the bank doesn't know what you know. They have less information. They don't know if you're going to be a super dedicated student or not so much. They have no idea what your real career plans are. And because of this gap in knowledge, they get cautious. And that often means tougher rules for getting a loan.
Last but not least, I is for inequity. See, a typical loan is a one-size-fits-all kind of deal, which sounds fair, but it really isn't. It means a graduate who's earning a ton of money pays the exact same monthly amount as a graduate who's just scraping by. That's just not fair, and it puts an absolutely crushing weight on the person who's earning less.
So, we've got all these problems: collateral, uncertainty, inequity. What's the fix? Well, this is where you can really show off in your exam. You can talk about a smarter, better way to do things. Something called an income-contingent loan, or ICL for short. So the big question is there a better way? A way that's more inclusive and, just fairer for everyone? Well, the answer is yes, and it's all about changing the very design of the loan. And here's the difference, plain and simple. A standard loan has these fixed payments that don't care how much you're making, but an ICL, it's smart, it's flexible. Your payments are just a percentage of what you earn. So if you're making good money, you pay a bit more. If you're not earning much, you pay less. And get this, if your income falls below a certain level, you don't pay anything at all until you're back on your feet. It's like having a built-in safety net.
Just look at this. This chart shows you everything. See that first bar? That's the burden on a low earner with a standard loan. It's huge, right? Crushing. Now look at the next one. With an ICL, that same person's burden shrinks right down. It becomes something they can actually handle. And that's the whole point. It takes away that fear of getting into massive debt and makes education a real possibility for everyone, not just the lucky few.
Okay, wow, we've gone through a lot. So let's pull everything together. Think of this next part as your ultimate last-minute revision guide, your cheat sheet for acing this question on the exam. These are the key things you've got to have in your answer. First, talk about human capital and how it can't be used as collateral. Second, make sure you state that all the problems come from capital market imperfections. Third, explain information asymmetry. Fourth, use that awesome mnemonic, CUAI, to list out the 4 big problems. And finally, bring it all home by talking about the income-contingent loan, ICL, as the better, fairer alternative. Seriously, if you hit these points, you are setting yourself up for a fantastic grade.
And before we go, I'll just leave you with this one final thought. Don't just memorize this stuff. Think about it. If you were in charge, how would you use these ideas to build a student loan system for India that's truly fair for everyone? Really thinking that through for yourself, that's the best kind of exam prep there is. Okay, that's it for me. All the very best for your exams.